Hello and good afternoon. Today I am Professor MC Pandey is before you to introduce you marketing infrastructure institutions, which is the part of your journey in fundamentals of financial inclusion and cyber safety. In earlier lecture, you have learned about asset allocations, various concepts, and in this lecture today we are going to discuss some topics like to get better basic knowledge about market infrastructure institutions, importance, types and functions of MIIs, brief introduction of stock exchange, depositories and clearing houses, brief introduction of SEBI and role of SEBI as regulatory authority. In the last lecture, as I told you, we have discussed asset allocation, various concepts. So, today's topic is market infrastructure institutions. So, let us discuss the meaning of MIIs. We have taken two definitions of MIIs. One is based on the functions and other is based on the infrastructure. So, function based definition says the term market infrastructure institutions MIIs is used for the market entities that provide the essential infrastructure for running the daily operations in financial markets. Basically, these institutions are engaged in trading, clearing, and settlement of financial instruments. So, these three functions are given here in the first definition. In the second definition, Dr. Bimal Jalan, in his report on Committee on Review of Ownership and Governance of Market Infrastructure Institutions 2010, says stock exchanges, depositories, and clearing corporations are collectively referred to as securities market infrastructure institutions. So, in this definition, three institutional infrastructures are given: stock exchanges, depositories, and clearing house corporations. Market infrastructure institutions characteristics are given, and we will discuss this in later on. MIIs are separate corporate entities. These institutions are established with profit motive. MIIs provide a structure and system for trading and trade related activities of market securities. MIIs work as primary regulator to the capital market, and every MII has to be registered with SEBI. If we discuss in the reverse order, we found that as every MII is registered with SEBI, they follow the rules established by the SEBI. It provides a lawful base of trading, and MIIs charges for their services as they are profit motive institutions. So these characteristics elaborate MIIs in detail. Importance. The importance of market infrastructure institutions. MIIs help in efficient trading of securities and derivatives, which help in economic growth of the country. MIIs provide safe and flawless transaction in capital market. It saves the investors from frauds and embezzlement of funds. MIIs provide a mechanism for fair trading, clearing, settlements, record keeping, and storage of securities. Absence or inefficiency of the system may adversely impact the finance system of the country. MIIs regulate the market, which provides financial stability to the economy. MIIs give a perfect system of trading in securities, which gives confidence to investors. And next, MIIs make the funds raising safe and easy for corporate sector, which provide economic growth to the nation. Now we come to the functions of MIIs. Broadly, three functions are there. One is trading, other is clearing, and then settlement. So first one is trading. Trading of stock means buying or selling of shares or other such securities of companies listed on the stock exchange. Online trading means doing above process through an online platform. Purpose of this trading function is to earn profit by investing or disinvesting of investment. It includes the trading of shares or stocks, bonds, derivatives, mutual funds, or other securities of similar type. These type we have learned in previous lectures also. Now comes the function of clearing. Clearing function ensures the smooth and efficient operation, reducing risk and facilitating the flow of funds. It refers to the process of setting financial transactions, ensuring the timely transfer of funds from buyer to seller and securities from seller to buyer. This is very important. The timely transfer of funds from buyer to seller. Buyer pays the amount of the shares purchased and seller delivers the securities to buyer. So the clearing houses make it comfortable and convenient. It is the process of reconciling, setting, and facilitating the transfer of funds or securities between parties. It ensures that financial transactions are safe, smooth, transparent, and risk free. Now it comes the third function of MIIs, that is settlement. Settlement function refers to the process of transferring ownership of securities from the seller to buyer after completion of the trade and the corresponding funds are transferred. Settlement is done by ensuring that buyer has received the shares and the seller has received the payment. So both parties must be satisfied in a smooth functioning of the financial market. Demat accounts play a crucial role in the settlement process of the stock market institution. So Demat is the most important functions of this work, and Demat stands for dematerialization. Institutions engaged in settlement functions are called depositories. So depositories make the Demat function easy, smooth, and workable. Now we come to have an introduction of institutional framework. So three institutions are there to make the MIIs complete. First one is stock exchange. Stock exchange are the institutions, or say these institutions are the marketplaces where buyers and sellers meet to trade securities such as stocks, bonds, and derivatives. These institutions provide regulated environment for trading, ensuring transparency and fair pricing. Stock exchanges are National Stock Exchange, Bombay Stock Exchange, National Commodity and Derivative Exchange, Multi Commodity Exchange, and some other exchanges are also there, like Calcutta Stock Exchange, Madras Stock Exchange, OTC Stock Exchange, but here we have given only some examples. In the depositories, they streamline the security market by maintaining investors' account, facilitating trade settlement, and offering various services like account statement and enhanced liquidity. They also work for KYC compliance, interoperability, etc. Primary function of the depository is to hold securities in electronic form, which we have earlier discussed as Demat. They facilitate for sale and efficient trading and settlement. Example of depository institutions are National Security Depository Limited (NSDL) and Central Depository Services Limited (CDSL). We will discuss in detail in later part of the lecture. Then comes the third institution, clearing houses. Clearinghouse is an institution that works as intermediary, guaranteeing the integrity of the trades and ensuring that all transactions are properly confirmed, settled and delivered. It acts as a buyer for the seller and seller for the buyer. Means it works between buyer and seller and it facilitates both of them. It eliminates counterparty risk and ensures that all trades are valid. Example of clearinghouse are National Security Clearing Corporation and Fixed Income Clearing Corporation. So these are working in the MII as MIIs. Now we have to give the brief introduction of SEBI, as SEBI is the main regulatory body for the financial market. So Security Exchange Board of India (SEBI) was established by Government of India on 12th April 1992 by passing an act in the Parliament. It works as a regulatory body. It regulates the security markets. It forms code of conduct that should be followed by corporates as well as by financial intermediaries. It protects the interest of investors investing in securities. In the second part of our lecture, we will discuss SEBI in detail. But as a regulatory, we are giving here some of their roles. First one is defining the rules and regulations and forming guidelines and code of conduct. Means all guidelines are given by SEBI to these intermediaries, regulating the process of taking over of a company. Registration of MII, it is a very important function of SEBI. Conducting inquiries and audit of stock exchanges, prohibiting insider trading, checking price rigging and establishing fair practices. So SEBI regulates all these market infrastructure institutions, and market infrastructure institutions regulate the market by the rules of SEBI. So in this part of our lecture, we have learned something about meaning and importance of market infrastructure institutions, types and functions of MIIs, stock exchanges, depositories and clearing houses. We have just given introduction of these institutions. Various institutions working under broad categories of stock exchanges, depositories and clearing houses. SEBI as regulatory body of MII. So this was in this part. In next part of our lecture, we will discuss types of market infrastructure institutions, functions of MIIs and role and importance of MII. See you in the next part of the lecture. Thank you. Thanks again.